Welcome back to Bazaar Morning Call. Let's take some stock action now from our experts. Mitesh Thakkar and Shrikant Chauhan have been sitting with us. Mitesh, what are the stocks that you're going to be looking at today?
Yeah. Morning, Sonia. I have a mix of buy and sell calls, so 2 buys and 2 sells. On the selling side is SBI Life with a stop at 13.10 for targets of 12.55 and Laureus Labs with a stop at 5.38 for targets of 5 and 2. On the buying side is Granules with a stop below 312 for targets of 332. And Delta Corp had a good breakout in the last hour of the session yesterday on a mild pullback, say around 218, 219, buy with a stop at 212 for targets of 233.
Okay, by the way, just want to keep an eye on how Vedanta is open pre-open, because I think that really would be your first stock to track early morning. It's no longer in the index, but it's a very influential stock for the metals pack. And you know, the sense you got is the rally that you had for last 2 days, the entire rally could be at risk. It's starting 10% down. F&O stock, so that's the first temporary freeze that you have on Vedanta. Really, I mean, so much flip-flop all over the place. Shrikant, what about your stock calls?
Yeah, Anuj. I think, United Spirit is clearly indicating us that the stock is heading higher. The stock has completed its correction around 750, 770 levels, and after that, the stock is consistently forming higher top, higher bottom. Now it is very close to the breakout level, and on the dismissal of the important level of 870, we are expecting stock to move towards 1000 or maybe 1050. So it is very close to the major breakout, and we should be buyer at current levels. With a stop loss at 830 on the downside, we can expect 890, 900 in the short term. And the other stock on which we are bearish is Hindalco, because here the stock has formed double or multiple top sort of formation. The stock can slide again to the levels of 400 or maybe 395 in the near term. So it's a short at current levels with a stop loss at 431.
Okay. Well, thanks a lot, Shrikant, for that. Have a good day. That's the opening, by the way, on the rupee. Very close to that 80 mark again. 79.80 is where we're trading at. And the first tick on the markets as well is not looking good at all, down about 200 points. We'll wait by for these rates to adjust. Generally, in the last few days, we've seen every dip getting bought. For now, we are just, at that 17,670 level. Let's see how it goes. Mehrbun Irani is still with us. Mehrbun, I wanted your thoughts on a space that you track very closely, which is autos. But within that, the tire space has been doing really well. I mean, JK Tires, for example, was up 17% yesterday. And I do know that raw material prices have fallen quite a bit. But is demand so strong that it's justifying these kind of moves on tires? And would you buy any of these names now?
I possibly saw it coming. I think, Sonia, you and I have discussed this sector so many times over the last few years. I think, and looking at the way the stocks moved, I think it was but natural that this question was coming. I would say that the tire industry has been, in a way, on a roll. I think the revival in auto sector, the falling prices of natural rubber, higher operating margins is something which you already mentioned in your question itself. The threat from imported Chinese tires remains. But the point is, if you possibly hear some tire company management talking, they are saying that it has possibly peaked out. Incremental imports are not going to happen in terms of percentage beyond a point. I think the reduction in crude prices also has been a positive for this particular sector right now. Well, let's understand one thing, that there has been an increase in production of natural rubber. There has been a reduction in crude oil prices. Now, why crude oil prices? Because you can make synthetic rubber out of this crude oil. And tire companies have the flexibility of moving between natural rubber to synthetic rubber. So everything is auguring well for them. They are also possibly increasing the imports of other raw materials, so the tire companies, which is an indication that they are quite gung-ho as far as the demand goes going ahead. The point is, will it actually fructify? One really doesn't know. But on the other hand, if you look at the valuation of tire stocks, despite the sharp run-up in price, you cannot say they are very expensive. They are into the low double digits, maybe 9 times, 10 times, 11 times. So I cannot and you cannot have reservation that they are expensive stocks. But the way the stocks have gone up, virtually there is a consensus buy as far as tire stocks goes, be it a JK Tire, be it an MRF, be it a SIAT, be it an Apollo Tires. I think the point is there more money to be made in the shorter term? I don't honestly have an answer to that, because after the run-up, there is a distinct possibility it could consider and come down. If I was an investor wanting to buy, I won't be in a hurry to buy after the decent run-up which we have seen over the last 2, 3, 4 trading sessions. I would wait for a better opportunity, but even if then I still want to push myself to buy something, I would put Apollo Tyres at number 1 ahead of the others. So MRF, I always stated, Sonia, you very well know it, and so the viewers, they always say that it is like a core stock in somebody's portfolio. But at the present valuations, at the present levels, I would say Apollo Tyres possibly edges out the others in terms of stock preference.
All right, tires, absolutely on fire yesterday. See it especially. Volumes, some of the highest we've seen in the last year and a half. Stock was up 20% or so. Maribon, it's a pleasure. Thank you very much for joining us here on the program this morning. Let's just look at the Nifty. It's settling in 100 points lower. I think just a couple of minutes more for the pre-open. But that's a fair indication now where the market's likely to open at 9:15, 17,764 and 59,599 on the Sensex as well. We'll keep an eye on the currency as well, which is opening about 10 paise weaker against the dollar. Shriram City Union Finance is the first company we're speaking with this morning. The company has seen dispersals remaining strong, but that is not translated into AUM growth. To get a sense of how the business is looking overall, we are now joined by Mr. Y.S. Chakravarti, Managing Director and Chief Executive Officer at the company. Thanks very much, Mr. Chakravarti. Appreciate you joining in. You know, you'd said that through the course of this year, disbursements would average around 7,500 crores a quarter. AUM growth, you said, should be between 16 to 18% for the full year. Yeah. Q2, we are deep into the second quarter. How are things looking? Could you tell us if those numbers are what they said they will be?
Yeah, we are on course. I think as of now, we are on par with what we have achieved in the first 2 months of Q1. Q1 has been actually one of the best for us, as you know, for a period of last 5-6 years. So Q2 is doing good. So we are actually keeping our fingers crossed for the coming festival season to see good demand. Particularly two-wheeler, we have. If you look at the Q1 numbers, we've done about 2.6 lakhs, which is against about 9.6 lakhs last year. So we are on course this year to cross about. We are targeting for about 100,000 average per month. That would be about 1.2 million two-wheelers to be funded this year, and I think we are on course to hit that number. Okay. Similarly, SME also, we are seeing a very good demand from the market, particularly our trading and service sectors. So disbursements, we are on course. A growth you'll see coming in this next 3 quarters.
Okay, wow, that's great to hear that Q1 has been the best that you've seen in the last 5 to 6 years in terms of disbursements. Actually, your margins, your net interest margins have also improved quite sharply. Do you expect that uptrend to continue, and what could the average be?
It could stabilize here, because it's also a fact. Your product mix is a factor for that uptick in the margins. It's basically your two-wheeler and SME contributing to the net interest margins there. So, I think we'll hold it steady there. We are not looking at increasing our rate, so we'll hold it.
So you're saying hold it steady means it was about 13.7%, right, in the quarter gone by. Yeah. So that's a rate that you expect will stay through the course of the year?
Yeah, about 20 bips plus or minus.
Okay.
Mr. Chakravarti, so what are the indications across segments? Are they pointing to an acceleration in business in disbursements as we get into the thick of the festive season? Which segments are looking particularly strong, or will the rate of change will not be that meaningful? I'm talking about, we're almost done with Q2, into Q3 as well.
So, Q3 generally is very good for our two-wheeler business. So we actually do about 50% more than what we normally do in each of the other quarters. So that's one we are banking on, two-wheeler. SME also during the festival season, starting from now, there is a demand for working capital on the SME sector, particularly trading basically from the trading sector. So it's SME and two-wheeler for the third quarter. Gold festival season will be slightly slow, so fourth quarter we are looking at gold picking up well.
Okay. On the asset quality front, just wanted to understand a little more. The NPAs have remained stickier, that is on the higher side. Some of the pockets have seen challenges as well in the recent past, but now that things are improving, do you expect an improvement in asset quality too?
If you look at our performance in the first quarter and the fourth quarter of last financial year, in fact, again, first quarter collections have been one of the best for us. And so far, the trend is in these 2 months of the second quarter also, we have crossed almost close to 104% of collection efficiency. So we expect NPAs to actually perform better in this current quarter as well as going forward. See, my push for higher disbursement comes from my comfort in collections.
Okay. Also wanted to check with you, post the merger with HDFC, what would be the business momentum? What kind of growth are we looking at in AUMs as well as in disbursals?
See, SCUF as a standalone entity, we are, as mentioned earlier, we are looking at 16 to 18% growth in AUM. And HDFC has put out a guidance of about 12%. So my sense would be on a combined basis, we should grow at least anywhere between 12 to 14%.
Yeah, I mean, if anything, it drags low, right? That was one of the concerns, that there is no real material synergy benefits of the merger, etc. I mean, you'd said that the merger gets completed by October, right? This year.
End of October.
End of October. Do you have a real sense of how this is sort of now? You have, I mean, you're closer to it now at a branch level in terms of customer, in terms of product offerings, etc. How is it going? If you can give us some sense.
Yeah. Before that, Anuj.
Prashant here, sir.
I'm sorry. Before that, see, for synergy benefits, we are not have become one. Second is, we are working towards product integration with all the branches of both the companies. So I would request you to give us at least a couple of quarters to see the synergy benefits kick in, number one. Number two, as of now, what we are trying to do is we are actually taking our products, say, gold loan and SME, into all the SME HDFC branches. Gold wherever it is feasible. Typically, we are looking at a ground floor or a first floor premises where HDFC is there, and across the country to all the branches of HDFC, the SME loans. We are in this process. We have started a pilot, and this month we will be ending up with about 1,000 branches into the pilot. So by end of October, we should be actually introducing all the products across the two entities. Both the entities' teams will be equipped, both in terms of skill sets and also software side, to onboard customers of both the companies.
All right, Mr. Chakravarti, we'll leave it there today. Thanks a lot for joining us. That's Shriram City Union Finance. Well, let's look at where the pre-open settles slightly better than SGX Nifty, just so slightly, 17,796. Remember, it would be very close to that 17,771 first line of defense that I spoke about in the morning. That was the Wednesday low. And the 20-day exponential moving average comes in at 17,690. This zone has been defended, so whether the market defends it again or not. Mitesh, if we open here, do you trade it, and what's your 9-10 call?
Anuj, as I said, I think, while the opening looks like stronger than what the SGX was indicating mildly, but I think I would still wait it out. I think the indicator setup is slightly on the weakest side, so not trading the index immediately. On the 910 call, I think SBI Life, that's a sell call with a stop at 1310 for targets of 1255 can be a good choice for the day.
Okay, SBI Life is a sell call. 1289 is where it is trading in pre-open. Mitesh, thanks a lot. We'll come back to you at around 10 a.m. The first rates would start hitting us now. The first rates are in impact. The Nifty is down only 61 points. Actually, it's better than what the SGX Nifty or the pre-open told us. 70 points down now. So, okay, maybe I spoke too soon. 80 down now on the Nifty. So, in line with what at least the pre-open was telling us. 17,785. 17,782. So now getting in line with the SGX Nifty, 17,777. So very close to that 17,771 Wednesday low that we had. Maybe, okay, we've revisited that. IT clearly is taking it on the chin once again. Infosys is your top drag on the index. It's got support from, or rather, from the bear's point of view. Tech Mahindra and Wipro as well are down. Hindalco is opening down about 2%. HDFC and Reliance, these are two stocks which are putting quite a bit of pressure on the Nifty. And of course, Reliance right now down about 3/4 of 1%. My sense is that maybe now that would be the biggest drag on the index. Axis Bank is down as well. Tata Steel, TCS, so a lot of stocks down. And the Nifty is now below that 17,771 mark. On the upside, couple of pharma names, Cipla and Sun Pharma stand out. And UPL is in the green, but at least on the index, the start is quite weak. Sonia, what about the broader market?
It's not so bad in the broader markets, Anush. To be fair, it's down just about 0.2%, and the market breadth also is in favor of advances. So let me start with the positives because you have a lot of buying that we've seen in the last few days, especially in the tire names. So there is an uptick once again in names like Apollo Tires, JK Tires, something like a Schaeffler India is up almost about 3% So these bearing companies, some capital goods names, Thermax is up 1.5%. Insurance, Star Health is up in the green, up 1%. KEC International has been receiving orders, so that's in the green right now. KEI Industries as well is up in the green. Mahindra CIE Auto, Berger Paints, JSW Energy, these are stocks that have bucked the trend and are in trading in the green. But now the losses in the mid-cap space are also accelerating, so it's a 0.5% gone over there. On the downside, Ujjivan Small Finance Bank is down 2.5%. You have Zomato, which is down about 1%. Vodafone Idea is down 1%. Nalco, Sale, Karur Vysya Bank, IDFC First Bank, Bank of Baroda, Ashok Leyland. Some profit taking on tires now. So Apollo Tires is in the red, down about 0.5%. But you'd have to say it's down but not out for the markets. The Nifty as well is down about 150 points. It is, of course, the IT space that's really taking it on the chin. But leaving that aside, it's not such a bad showing.
It's not actually, but the fact is that we are below the low from that big Wall Street crack, right? Finally, it took a few days, but we're finally back there. 17,736, 17,770 was the low that day. It was Wednesday, and the market kind of defied it in a very big way. But now finally there is a little bit of pressure which is starting to come through. So we'll see how things go and get you more stocks. But today, of course, I mean, as is the case, as it will be, it's overwhelmingly a lower kind of a day. Let's just allow for volumes to pick up, etc., and then we'll come back to more prices, more stock-specific prices. Our market master of the day is Rajat Rajgaria. He's Managing Director and CEO, Institutional Equities at Motilal Oswal Financial Services. He's now joining us for the Motilal Oswal big conference curtain raiser. The conference, of course, is set to kick off starting Monday. Rajat, great to have you with us here. Thank you very much. Good morning. During the conference and post the conference, we can get a sense of the feedback that you're getting from corporates who are attending. But before the conference, I can probably begin by asking you, what's the level of enthusiasm right now? And that we can gauge from the registrations we are seeing. This is also one of the first kind of completely COVID-free conferences in a while. So how are things looking, Rajat?
Good morning, Prashant. Good morning, everyone. Very pleased to be back here on the curtain raiser for our 18th annual investor conference. And Prashant, you rightly mentioned, we are doing this physical format after a break of 2 years. We have almost 170 companies, the who's and who's of corporate India across sectors. Our celebrated CEO track, which features almost 15 plus CEOs and experts across corporate India and different walks of life, are going to share their views with investors who are assembling from across the globe. We are looking at almost 1,000 plus registration of clients. We are looking at 170 plus corporates. And as we speak, the number of meetings requests continue to pile up. I think this will be an all-time high for us, where we are looking at almost 13 to 14,000 meeting requests that are coming from investors across the globe. So I think even investors are very keen to get back into the physical format of interacting with companies, and we are happy to host them the coming Monday, Tuesday, Wednesday. The 3 days of the conference should be quite exciting and should open up a lot of investable ideas for our clients.
Rajat, good morning. I guess that's why you're not getting any rooms in Mumbai, in any hotels. So 14,000 meeting requests. Is the FI interest in India at all-time high? And how much of this is pent up? Purely because in the last 2 years, they just could not come here and, meet with corporates, because kind of outperformance that we've seen for Indian market, Rajat, is stunning.
Absolutely, Anuj. In fact, not just the conference, but throughout the last 6 to 8 months, the number of virtual interactions that we have been providing for FIIs with Indian corporates has been almost a new high. And I must say that every week we are seeing some group of FIIs from some country or other who are continuing to visit, where we are hosting their itineraries. But specifically for this conference, I think the number of FIIs from multiple countries that are coming to visit our conference is something that we have not seen earlier. But I must put a caveat here that over the last 3-4 years, we have seen the rising dominance of the domestic investors being very high, and that spread of domestic investors has moved beyond the mutual funds and insurance also. So this time, when I look at the client registration and the meeting request, I must say this is as diversified as I would have ever seen in the 18 years of we hosting this annual event.
Wow, that speaks a lot, right, about the kind of enthusiasm that we're seeing in the market. But I was going through your note, Rajat, and you have done an analysis on how the last decade has panned out for corporate profitability, right? And you speak about how India Inc.'s earnings have multiplied 2.6 times between this FY12 to FY22 period. And there are, of course, many sectors that have taken the lead. But from now, over the next decade, what do you see as the big trend? Which are the sectors that can assume leadership, and where would your preferences lie?
Yeah, so when you look at FY12 to FY22, that same report divides the 10-year into 2 phases. And we know it has not been uniform. In fact, for the first 6, 7, 8 years, the growth was relatively low. I think it is the last 2 years where the growth has picked up, and that has been surprising, because standing in March 2020, we would not have assumed that the growth rate for corporate sector and the markets would have been so high. But I think where we stand today, one can comfortably say that the next 10-year growth rate is going to be better than what we saw in the last 10 years, right? And the 3 primary reasons: your financial sector is in the best of the health than what it was in FY12. You are looking at a big capex cycle, which was almost absent during the last decade. And I think third, the emergence of many new industries, be it insurance, be it e-commerce, a lot of them are going to contribute to profit, while they were largely contributing to low profit or losses in the last decade. So I think fair to assume that the next 10-year growth rate is going to be good, higher compared to the last 10 years. How much we all will be a part of that.
Rajat, just one quick thing, and you'll have the figures, but I remember reading that about 50% of Nifty earnings, right, are dependent one way or the other to global, to the global economy. Correct me if I'm wrong on that. With the globe starting to slow, I mean, it's also the cyclicality of the thing, right? We've had many years of above trend growth, and these are cycles. And of course, I mean, there is a problem at hand, the inflation issue and what central banks are doing, etc. A slowing world, how does that impact earnings potential growth, and does it hurt to what degree if you looked at it?
Right. Prashant, I think that 50% just needs to be divided into two buckets. While IT also may be linked to global economy, it is not as cyclical as what you typically think about the metals, right? There the growth rate may vary in the lower end at about 8 to 10%, higher end 12 to 15%. So I think that is as strong as what your domestic staples are. Secondly, I think Reliance also needs to be bifurcated well between the ONG and the telecom and retail because they are now a lot more domestic. So I think when you look at last year, FY22, you had the record year for metals like Tata Steel reported a record profits and some of the other domestic businesses were still being impacted. So that ratio may look higher for 1 year, but I think amongst the larger economies, we are still the one which are least insulated from the global cyclicality. For our earnings, I think the global cyclicals would not be more than 15-20%. The rest would either be domestic or would be global, more structural spaces like global IT.
Okay, since you just said global IT, Rajat, are there any big IT companies coming to your conference and have investors lined up with them? Because that's where the big debate is, right? On Indian IT, which has been leading the market for the last 4 years. And this year we have seen a crunching bear market.
So, Anuj, we have in our CEO track, we have two special sessions on IT. One is being presented by Mr. Harish Mehta, who has been the original founder of NASSCOM. And second, we have a session by Mindtree. So in the track itself, we have two sessions. And in the one-on-one meetings that we are doing of 170 companies, there are mix of both IT companies, IT product, both IT services, IT products, and number of e-com companies also. So as I mentioned that the 170 companies has a mix of every sector that one can virtually think of.
In your note, you talk about the top 10 companies of the last decade that were big performers, right? And within that, the most profitable companies include names like Reliance, ONGC, and TCS. In fact, the three of them are the top 5 profit contributors throughout the decade. Do you think the leaders of the last decade will change in the next decade, or could it continue to be the same, which include names like this?
The sheer size of these companies has become so big that even if they keep compounding at 10-12%, their base keeps becoming high. So if you look at the same report, the ranks within the top 5 companies have been changing, but the top 5 have largely been the same, right? I will be surprised if you really see more than 2 or 3 being displaced out of the top 5. Reliance, just because of the sheer investments and what they can do out of these investments, in my view, would remain amongst the top. TCS, again, the profit base is very high and they can keep compounding. I think maybe, you may see 1 or 2 banks like HDFC Bank as a group when they will get consolidated may emerge over the next 5-10 years as one of the top 5 companies in terms of profits.
No, I think my question, Rajat, was more about how do you deal with this disruption that we're seeing, right? 10 years ago, perhaps, if you would have bought a stock and just let it be for 10 years, that would have been fine. But now things have changed. Sectors are evolving by the year, forget about a decade, right? So do you think the same set of sectors, IT, oil and gas, that did well throughout the last decade will continue to do well? That was my question.
So I think IT will definitely do well when you look at beyond the next 12 months. So if you look at next 5 years, 10 years, I think their strength, their dominance will remain. Oil and gas is something which I think is a very difficult view to take because we are also talking about a lot of disruptions in the global energy basket, right? So I think that is one space that I am still unsure about. I think financials as a basket, you will see rising in ranks because again, last 10 years, we saw profits being depressed. Next 5 years could be like a very sweet cycle. But again, you need to understand that the profit pools of every sector is not so high to be amongst the top 5 or top 10. Companies may have a very high growth rate, but the absolute profit base will not be very big for them to be in the top 10 or the top 5.
All right, Rajat, it's a pleasure. Thank you very much for joining us, and we'll have lots of interactions with your other team members through the course of the day and through the conference as well. Good luck with that, and hope to hear more from all of you. Thanks very much. with that perspective. All right. Now, Vivek is joining in on some of the interesting changes with regards to the Sensex and FTSE rebalance and the kind of flows and the impact that specific stocks are likely to see. Vivek, tell us, when is this rebalance going to happen, and then, of course, who's impacted?
Well, so what we have to keep an eye out for is the fact that Sensex has actually given a list of stocks where there will be weight changes. When you're talking about FTSE, there are a couple of things to keep in mind. Number one are weight changes, both upwards as well as downward revisions, and other things, some inclusions as well, as far as the FTSE index is concerned. Why is it that we are tracking it today? A whole host of passive funds, given the fact that these changes come into effect Monday onwards. Today is the day in which the trading adjustment will happen, and which is why you will see passive funds forced to actually make the changes in the trading session today. So what we've done is a whole host of stocks that are there, but what we are trying to highlight are the top stocks that will be impacted in terms of the flows that are expected to be seen. So the first one that we're taking into account is Sensex. When you're talking about Sensex, keep an eye out for Kotak Mahindra Bank as well as IndusInd Bank. Weights will be adjusted upwards. A $44 million flow is what analysts are estimating as far as Kotak Mahindra Bank is concerned. IndusInd Bank expected to see flows of close to $11 million during the session today. On the other hand, HCL Tech and SBI are seeing their weights go downwards. SBI expect the outflows of close to $12 million. When they're coming to FTSE, some higher number of stocks will be impacted. Indian Hotels is one particular stock expected to see flows of close to $45 million, and this particular stock has seen significant momentum in the last few trading sessions on the back of this anticipated inflow. CG Power, again, $34 million coming in here. Gujarat Fluorochem, $25 million. Schaeffler India, Linde, as well as Motherson Sumi too will see flows coming in. On the other hand, Indiabulls Housing Finance and Tata Power will see outflows. Tata Power would see outflows of close to $20 million in today's trading session. Keep in mind, these changes have been announced earlier, especially FTSE 1 month earlier. So active fund managers would have already started pricing in these particular changes.
Okay, thanks a lot for bringing that to us. By the way, the mid-cap index has cut its losses. In fact, there's buying that's resumed once again. So names like India Cement, SEAT, Adani Transmission, all the stocks that have been seeing fervor lately are back on the buyers list. But let's talk about Cipla now. Ekta is here to give us the latest on that. Ekta, over to you.
Well, yes, I'm watching Cipla today because Jefferies has written on it. They have a buy. They've raised the target price to 12.23 versus 11.44 earlier. According to them, the upcoming launches and pipeline looks strong for Cipla. They've revised their US and margin estimates given the strong product launches on the horizon. So they've revised the FY23 estimated EPS by 4% and FY24 estimated EPS by 3%. They've revised the FY24 EBITDA margin to 24.2% versus 23.3% earlier.
Okay, thanks a lot for that. So that's Cipla. Jefferies with a buy call over there. In fact, the stock as well is higher in trade this morning. It's up almost about 1%. But let's talk about the big factor globally, which is hitting a lot of companies. European gas prices are surging, and there's a sharp jump in electricity costs in the European region as well. We aim to look at the impact on chemical production. To get a sense of which way things are going, a key chemical player is joining us now, Deepak Fertilizers. Shailesh Mehta, who's the chairman and managing director of the company, is with us, and my colleague Sonal, who tracks the space very closely, is also joining in. Mr. Mehta, good morning. Before I toss it across to Sonal, I just wanted to, understand from you, how is the situation in Europe right now with respect to higher gas prices? Has that impacted ammonia production in any way? You have a plant coming up for ammonia. Do you think prices will remain elevated?
Yeah, so let me give you first the specific aspect and then the larger picture. So indeed, the gas prices have shot up in Europe, and that is impacting a lot of downstream industries in Europe. And from an overall perspective, from a global perspective, ammonia prices have shot up. So from that perspective, there is this volatility in the sector that we are seeing. However, what we are also finding is that finished good prices are also been, upward, northward kind of a thing. And that has certainly helped in terms of the pass-through. And which is why, if you would have seen that last year was our historic best. And the Q1, again, we crossed over 3,000 crores in terms of our top line, which was a jump of 60% over last year. and the profits crossed 436 crores, and that was a jump of 233%. So from that perspective, we are seeing that this volatility is there, but the delta for us has been quite positive.
Right. Mr. Mehta, that's interesting. Just to kind of take a step back, or rather a few steps back, Sonal is with us as well, and she's explained the chemistry to us many times. But for those of us who are not chemistry graduates, could you tell us, could you just explain to us the basics? I mean, what is used to produce what? Where is the shortage and what is the impact? And just, I mean, at a very basic level, if you can just explain that to us. Yes.
Absolutely. And I'll give you also a connect to the overall strategy. So fundamentally, from natural gas, in our business, there are three businesses that emerge. One is the fertilizer business, where we make various grades of NPKs. The second business that emerges is the industrial chemicals business, where from ammonia or gas, ammonia, and then we make nitric acids. So nitric acid goes to feed fertilizers, as well as it finds a place in the market, which is a building block for specialty chemicals. So that is the second group. And then again, from gas, ammonia, the third business that emerges are mining chemicals, where we make technical ammonium nitrate, which goes to the mining sector. So this is the broad chemistry play, if I might put it.
You said
from a strategic perspective.
Sorry, just 1 minute before you get to the strategic perspective. Fertilizers, there is industrial chemicals, and mining chemicals. Right. Right. No. So the point about ammonia. Sorry, could you just explain that?
So ammonia is a raw material for all the three businesses.
Right. Right.
And that's the key reason we are looking at setting up our own captive world-scale ammonia plant.
Right.
Which will then bring a huge degree of, I would say, value accretion.
Right.
In our chain.
Okay. Now on the strategic bit that you were, sorry, I interrupted you.
Yeah. So very broadly, when we thought of our strategy and we said that, where do we go from here? Fundamentally, we saw two basic drivers. One from the outside in, where we saw that all the three businesses that we are into are beautifully aligned with the India growth story. So as India grows, it needs power, for which it will need coal, or it needs limestone for cement for the real estate sector, infrastructure sector. Now, all of it, and of course, metals, minerals, all of it require our technical ammonium nitrate as a mining chemical, which can help to reach out to the ore. So a beautiful alignment with the India growth story that a major business has, the mining chemical business.
Okay.
As far as the industrial chemicals goes, there we see this beautiful alignment emerging out of the China plus one, the shift that we are seeing. That is certainly helping the industrial chemicals and nitric acid business. And also we have certain pharma chemicals where we make isopropyl alcohol, which goes into pharmaceutical sector. There again, we are seeing that, it's a good tailwind emerging out of the India pharma sector.
Right.
And of course, the fertilizer sector, as you all know, that, as India grows, the mid-income group and the shift from basic grains to fruits and vegetables, that is beautifully aligned with our NPK fertilizer business.
So,
those have.
Okay, so Mr. Mehta, I just wanted to generally understand, because ammonia is a raw material for you, and with the new ammonia plant coming up, it will also be an opportunity for you. So are you looking at using it only for your captive consumption, or will you be selling it out? Because now Indian ammonia manufacturers could benefit because of ammonia production cuts that we are seeing in Europe, because Europe is 20% of total global ammonia production, so to say. So by when do you expect this ammonia capacity to come up, and what is the net impact for you? Because it is a raw material, and again, it will be a product for you very soon.
Sure. So see, currently, as we speak, looking at our current needs as well as the growth that we are looking at, our needs for ammonia were rising to almost 500,000 tons. And we would have otherwise had to import all that all the way from the Middle East, bring it to JNPT and then to Taloja, where our complex is. So what we thought as a part of our strategic growth plan, that why not backward integrate into ammonia? So a world-scale ammonia plant is under a fast-track project execution as we speak, and we are probably a year away from commissioning. So this will bring almost close to 500,000 tons of capacity into India. And we are investing roughly around 4,300 crores. And we are looking at Q1 FY24 to commission that project. Now, as you would have guessed, this project will bring in almost over 20,000 crores of Atmanirbhar import substitution over the next 10 years. And with that, we are looking at, adding almost, though it's a captive consumption, but almost 5,000 crores odd into the top line. And it will improve certainly, the overall cost structures because it's a key raw material.
Okay, exactly. So what would that mean for margins? Because you've seen a substantial increase in margins in Q1 as well. Is it something that is sustainable for you? What is the long-term margin picture and what kind of savings will you see in margins because of ammonia production and used for captive consumption as well?
Sure. So if you look at, since the ammonia plant is a year away, if you look at the near term, what we saw in Q1 was certainly a very, very positive, I would say, outlook that was there. But even if you look at the full year, because there will be some stabilization, sometimes it's seasonal, sometimes it is, the global aspect that is there. But as we go forward, we are seeing that 2 or 3 things. One is, as we see the volatile prices stabilize, we may find a certain kind of lowering of finished good prices as well as raw material prices. There might be a difference of a month or 2 in terms of stabilizing, but on a full year basis, we are seeing that that should continue to give us our deltas.
Okay.
The second is, of course, we have additional capacities. We have taken up certain debottlenecking programs, so that is also going to further add. And third, and the most important thing is that we have kickstarted this very specific shift in our business model. Where we are moving from commodity to specialty in each of our businesses. So that we believe is something that is going to give us, not just for this year, but the coming 3 years, a complete transformative change in terms of Deepak Fertilizers business outlook.
So exactly that was going to be my next question. Value-added products, what is that as a percentage of revenues right now? And chemicals are around 87% of your total profitability, right, as per Q1 numbers. Will that contribution continue to be higher? What is the overall growth you're expecting in both these segments?
Sure. So certainly the chemical segment is going to be now a predominant segment that is there. But in terms of these value-added products, let me just step back a little bit and share with you what is the thought process, what is the philosophy behind it. So basically, instead of us being into the product side of the business, we make a product and just do sales and distribution. We are now moving towards coming much more closer to the final end consumer, looking at each end segment, and then looking at what we could do to combine product plus services in order to make a holistic solution in terms of the total offering. So moving from pure commodity to a specialty. Now, just as simple examples in the 3 sectors, in case of fertilizers, instead of selling the typical NPK fertilizer or other companies sell urea or DAP or SSP, they're product focused. What we have done is we have done very intense work with farmers. In fact, we've had almost 50,000 demo plots to have deep conversations with farmers. And now we are coming up with a series of crop-specific nutrients focused on each crop. And that is going to be giving us a huge differentiator. Similarly, in case of the acids business, instead of just commodity acids, we are looking at for solar grade or for steel grade, how do we come up with specific needs that are there for that sector. And of course, in the mining sector, instead of just selling technical ammonium nitrate, we are bringing in the best of the blasting services, drone-based review systems, in order to give a full package, which will finally impact the final consumer, the mines, to improve the mine productivity. So those value additions are going to come in over the next 3 years, and we are going to see a good accretion and also differentiation, a brand creation emerging out of that.
Okay, that's very important. And I guess the street is factoring that in as well. Your stock has done exceptionally well in the last 12 months. Thanks a lot, Mr. Mehta, for joining in and speaking about Deepak Fertilizers. So we'll slip into a quick break. Up next, we'll connect with Anuj Kumar, the MD and CEO at CAMS. That's been one of the strong movers as well lately. More on that in a bit.